Awesome. Um, yeah, so I guess we can start off with GA since I'm in it currently.
Yeah, let's do it.
So when it comes to my levels, um, I feel like we both have a good grasp of where to locate the levels. But one thing that I feel like a lot of traders they neglect sometimes to understand is that usually the levels are, for example, this right here, the levels are lower than a possible trend line that price has to respect and retest before, the actual descent. So, um, for example, this one right here, the reason why I have this here, this trend line, is because you have your retest of the trend line, and then also you have a retest of this zone that I created, which I created in the 4 hour. I'm going to delete a lot of this other nonsense. So this horizontal level, I'm really taking this into consideration as a ceiling. Well, is now a support, and the reason why is not just the wicks, but also the rejection candles that are taking place within the zone. Um, so obviously right here we have a whole bunch of wicks that's set up all along here, and then you had a pretty full candle that took place here, but didn't really break through the level, and then the next two candles completely rejected that initial full one going to the upside. Follow. So finally, price broke out, impulse to the upside, and then now we come back down here to this area. First candle that tapped back into the zone was this, people call it a morning star or doji candle, whatever you want to call it.
Right,
And
right.
then and then after that, you have a candle that pushed down a little bit more, but then the very next candle rejected it completely. So when I try to make my levels, I not only try to identify areas that have wicks, but I also try to identify the area that also has some rejection candles in it, because based off just what I've seen on previous research and previous trades, that you know uh, the confirmation is a lot stronger when you have those.
Right, right. So you're looking for both like a top and a bottom in the zone, really paying attention to the wicks.
Yeah, because you definitely have to respect the wicks. Zones are great, but there's always this one candle that decides to reach extra far before it goes in the direction that you're anticipating.
Right, right, right. And then so how do you what do you do to determine your stop losses? Because I am trying to find a, a strategy to set stop losses based off the zone that I draw. You know what I'm saying?
hmm So I feel like the zone, I mean, I'm sorry, the way that we place our stop loss is sometimes based off our risk to reward management and not in respect to the structure. And what I mean by that is, if we're trying to stay within, you know, a 3% risk, and let's say that, you make your entry right here, but your 3% risk stops at this point here.
Yeah.
Naturally, we're supposed to have our stop loss at least down here below these wicks, because this is where the initial impulse took place, breaking above this zone here.
Right.
So usually sometimes, like, I would try to put my stop loss somewhere in this little area right here just to try and stick within my risk to reward ratio. Um, and that ends up biting me in the butt. So instead of, having my stop loss somewhere within this little region here, I would have it below the price action candle and have it like well below it to where, you reduce the risk of having it hit your stop loss.
Below the wick.
Yeah.
Yeah, definitely. So you pretty much look at the common wick area where it's rejecting. So if you can see my screen, I pretty much have the same markup, you know what I'm saying? But yeah, just shoot free throws, making sure we're on point. So here's my zone. This is the wick that we both identified as a bottom for the zone in general. So my stop loss would be, see, and there's wicks right here. So that's where I'm like trying to differentiate like where I should actually put it, right? Should I put it below this?
Mm-hmm.
Should I put it below the next previous wick, right? And so my stop losses are inconsistent with our strategy that we use.
Yeah, I mean,
Well,
depending on what type of trader you are, as far as looking for confirmation, I feel like is like some people use the Fibonacci, and they like to have their stop loss, you know, below the 78.9 or whatever decimal that is,
right.
and then other people like to have it below the wick. Other people like to have it below the zone and the trend line, so that there's double confirmation that it possibly won't hit your stop loss. So some people like to have it below your horizontal line that you have right there. Not your horizontal line, your diagonal line, your diagonal trend line. So they would try to put it below that and your horizontal. But it really just depends on where price action takes place. For me anyway, like I like to have it below the price action,
Below, yeah.
below price action and below the horizontal level that we're looking to bounce off of.
Right, right. Yeah, I dig it. I dig it. Yeah, and
I don't know if that made sense, if I was overcomplicating it.
it makes complete sense. Like I think maybe I'm not optimizing my entries, because I'm entering like up here, then I get the crazy drawdown, and then it'll maybe like come back down to the zone and maybe like come down like maybe 1 or 2 to 3 pips below the previous wick, right? Which is like the bottom. And then I get stopped out. And so, 60, 70 pip, like right here. Let's say I entered right here for a long. That's a 65.8 pip stop loss because I put my stop loss below that wick, right? And so now it's like, even though that initial move possibly went all the way up, I find myself getting stopped out sometimes on a good opportunity that we see as a long or short.
Mm-hmm.
So it could be my entries too, or a combination of both. Because I was up 1,700 last week, and then I ended up breaking even, which was not bad. I break even, but
Yeah.
$1,700 that I threw out the trash. You know what I'm saying? Like that could have been fun money or compound money.
Yeah. Yeah. I mean, yeah, it can be a combination of your entries and your stop loss placement, because again, it kind of goes back to just you wanting to have a significant trading lot size, and then uh, making sure you're abiding by your risk reward. Um, because if your entry is not good and you know where your stop loss needs to be,
Right.
but you don't do it because you want to have this certain lot size.
So what would you do in a given situation like this? Like if a trader were to see this opportunity, they're excited that it's a long position.
Mm-hmm.
They don't want to miss out on this opportunity. They're like, oh my God, it's going to be a crazy move to the upside, 218 pips, right?
Yeah.
right? And then it eventually floats back down to the zone and maybe a little bit below the zone, right? Like, what would you do in a given situation? Would you actually enter this position, or would you not
Well,
enter it?
if you knew that price was eventually going to go up, based off what you're looking at right now on your chart, I see that price is very, very close to um, the most recent rejection candle. I want to say it's like eight candles to the left or something like that. That blue impulse candle. So that one, and then there's another pair to the left as well. So you have that impulse, and then another one to the left of that. Uh, no, going to the downside. So you see that major impulse that went up?
This one?
No, the other one that broke above resistance. That
This?
one. Yep. So go over to the left a little bit more now. Those ones.
These?
These.
Uh, what about those?
So I'm paying attention to that because, again, everything before that were wicks, but you had a strong blue candle right here, and then the other one completely rejected it and brought you back into the zone. So I'm paying attention to that as well.
So you're saying like you're looking for the price to break above instead of looking out.
Looking for a price to break above instead of breaking out.
Because all these wicks are kind of pretty much like just chilling, and then this impulse is the confirmation, pretty much.
Yeah, I mean, just look at the chart, like not technically, but just look at it and say, all right, you have your impulse candle that was in the middle that completely broke out of resistance, shot up, and then in that very same exact general area, you have a pair of candles to the right and a pair of candles to the left that essentially rejected themselves and went the opposite direction.
Right.
Forget technical for a second. Just look at them for what they're doing and
Right.
say like these ones for example. Can you still see my screen?
Yep.
Okay, so all right, so you have these wicks right here, right? These ones.
Yep.
So if I just drag that across, all right, cool. And then you have this candle that decides to shoot down right here. And then this very next candle rejects it, brings you back into the zone, right?
Right.
And then it continues up. And now, if we let it play out, and let's just say price decides to come back into this area again, this, this right here,
Right. Right. Right.
and overall this is an upward trend because, it's clear, however you want to draw this trend line.
Right. Right.
Right? So now it's back into this area where you had that rejection candle that ultimately started the upward move right here. So next candle, boom. And then I can do that again. Like uh, it happened right here. It happened in this region right here where price came back down in this area, rejected, and ultimately went up.
Yeah, you did a rewind, right?
Huh?
You did a rewind.
Yeah. And then these candles right here, you had a rejection. Price went above it for a little bit, came back into it, and then you had some rejection candles right here. So like I've noticed that price likes to do that shit quite often. Um, you know, aside from wicks, because everybody these days they're looking for wicks. Everybody's looking for fucking wicks. But I don't feel like a lot of people are paying attention to rejection candles. Like this impulse candle right here, like started the, you know, the break and retest, going back to the upside here. Break, retest, on the way back up. You know, a lot of people would look for this, which is cool. That's great. But what about this candle right here that broke out of that resistance? So like you would pay attention to this area. And you know, I'm not trying to be very precise about my boxes. I'm more so trying to understand the area of where rejection candles exist. Because if you pay attention to the rejection candles, you're technically allowing yourself to get in at a very nice sweet spot. Fuck, excuse my language. I'm recording. I'm cursing. Oops. Whatever. So yeah, bro. Like, I mean, we actually even had this discussion before about identifying price action areas. Um, but I feel like if we were to focus on the areas of where price rejects, we'd be able to make more precise entries. Wicks and rejections within a zone. Wicks and rejections within a zone. I'll go to another pair. This one here, this candle right here. So you had a push to the downside with this very last candle here. Boom. And then you had this candle that rejected it. So I would kind of like surround my surround my box around that rejection candle. Where did you go? I don't even know where you went. I didn't even peep you leaving. All right. So for those who are watching, now ultimately what you're going to look for is support and resistance. So if you have your support and resistance, and you understand that, you know, support is ultimately where price comes down and fails to break through, and then goes in the opposite direction. So I just created a line right here, erase the rest of this, and show you that price was pretty strong right here based on this wick right here. This candle broke to the downside, then the very next candle rejected it, brought you back above this line. Did it again, gave you a wick, gave you a wick, gave you a push down, gave you a rejection candle again, and we're off to the races. Boom, 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 boom. Ride the wave. Same thing here. You know, if you see enough bounces off of a certain line, you got to understand that price is most likely going to reverse the other way. For those who are listening. Oh, you're back. What's up? I was talking to my future audience that watches this recording.
Hey, they'll be there. There's history in the making for Global Cap.
You don't even know. And yeah, man, it's, and then at that point, it's just psychological. You know, you make your entry within a rejection region.
So do me a favor really quick. Let's play out this scenario towards the recent price action on the support area.
Mm-hmm.
Right. No, go, well, where was
Hold
it
on.
at?
I just want to delete this stuff. What pair was I in?
Let's do a rewind to play out a situation,
Okay.
and I'll tell you where I would enter, right? And let's see how much drawdown I'm gonna get from price going down, wicking out, and then making its initial move.
That sounds good. All right, let me go. Go to GA. All right, no peeking. I'm about to rewind right now.
All right, all right.
I'm not looking either.
All right, go for it. Yeah, you're good, bro. All right, cool. So I see some setups. Yeah. So let's do that area right there. Right. So let me see if I can annotate on your screen really quick. Where you at?
Yeah, you can.
So do me a favor. Let's draw out a line for me, if you don't mind, right there for a zone. Okay. And then this is also a break and retest, right? So over here, looking left, right, we see that initial impulse break out, and then it retests down here in this area. Okay.
Mm-hmm.
So just macro, like looking at the bigger time frame. So this is probably a break and retest on the daily.
Mm-hmm.
On the 4 hour, right? Like I would be paying attention to the wicks, right? So if, let's go ahead and zoom in on the 1 hour towards the last bottom, I guess. So where I circled it, and I'll undo all this shit for you, or stuff, my bad. Clear the page. Cool. So right there, right? I guess.
I gave you access to my mouse.
So let's look left really quick, and then I'm going to determine where my entry is going to be. So I would probably enter. I guess this is not really a good example because it's a pretty tight. Those wicks are not the longest, but I would probably enter. So the candle, the first bottom.
You have mouse control.
Oh, okay. So right here, I would probably enter to the bottom of that wick. Right here. That would be my entry right there.
Right here.
Right. But hypothetically, let's just do a hypothetical. What if price came down to this area? This area. So that bottom. How many pips would that be? And you know what I'm saying? Like how much drawdown would I have based on that entry?
Like 30 pips.
So 30 pips. So it looks small. But in reality, that's a 30 pip gap.
Okay, so we're in the 4 hours. So most immediately, where do you see any potential entry?
Potential entry?
Yeah, up or down.
Up or down?
Do you see one yet?
Yeah, let me put out my mouse real quick or draw.
I actually gave you control to my mouse. I think you just have to accept my mouse control.
Oh, really? Okay, 1 second. Oh, okay.
Nice.
Oh, cool. All right, thank you.
Yep.
So, I mean, obviously right here, this would be my entry. So let me for that initial move. So this would be an entry right here. That'd be one. But then also I see an opportunity maybe like right around here
Mm-hmm.
because of these wicks. Oh, damn. Let me get rid of some. Damn it.
I have the permanent, the lock drawing tool
Oh, okay. Let me try to redo this one more time. And I'll adjust this one. So right there, a little bit lower. Sorry, there's like a little lag on my computer. All right, right there. So I see this big impulse up, and then a rejection and a rejection, right? So I would have probably entered right here at this rejection area.
on. Mm-hmm.
So it came back down to this previous resistance area, right? So this is the initial break, retest for the entry. But this little movement right here, there's more drawdown for about, is that 20 pips, right? So that would be another entry for me, just looking at a smaller break and retest within that 1 hour break. And then yeah, I would have taken it up to the previous high based off of the information given to me. So I would probably take it to like right.
Let's do this. So this is kind of what I've changed for myself as a trader, especially after finishing reading the book. Um, they do a lot of talking about how people become married to their technical analysis, and that's kind of what I've been trying to change for myself. And being open to the probability of the market not doing what I have drawn up, because that's where it kind of just bites me in the butt sometimes. So what I would prefer to do is, obviously we see the, where market exhaustion takes place. We see where there's support and resistance. We see where there's price action. So what I would like to do is just continue to press this next button until one of us says stop, and that's where one of our entries would potentially be. Does that make sense?
Okay. Yeah.
It's like, okay, stop. This is where I would put an entry.
Yeah. So I would probably enter there, just looking at the information to the left.
Okay, perfect.
Now I would take it back down to my initial entry, the last position that I entered and showed you.
In the yellow circle or
The little horizontal ray.
okay. I want to go into 1 hour real quick. I'm gonna put something right here. Okay, so now we're here. I want to see in the daily what we're dealing with. Okay. Back to the one. Huh? Did you say something?
No. You're good.
Okay. All right. So, well, okay. So the reason why I made this horizontal right here is because it's the tip of the highest body, and then the very next candle completely rejected it. Right. Right here.
Okay.
So going back to the most immediate price, it barely missed it. but let's see what it does here.
Oh, boom. So it did its thing.
Yeah. So now,
Well, let's stop it for the audience. How many
yep.
pips was that for that initial move?
All right.
Resistance to that previous horizontal ray that we drew up.
Okay. So if you took it from there, great. If not, you saw this one spiked, came back down. This one gave you a little wick. This one, even if you got in on here, right? So let's say that you got in right here,
Right.
because nobody makes perfect entries. Let's make sure that this is above our high, which it is, which is a 30 pip stop loss.
Mm-hmm.
And then you would have collected 130 pips so far. That's bank right there. That's your week.
Okay. And the previous horizontal would have been like what, maybe 35, 40 pips to the downside. So yeah, that area.
Right here.
Yeah, that's where I would have took my profit.
Right here, you would have took it?
Yeah,
Okay,
like a TP one. You know what I'm saying?
I see. Yeah, 40, almost 50,
Okay. All right.
47.4 to be exact. Okay, so I'm gonna come back over here real quick and see where we have the most immediate resistance. All right, so we got some price action move right here on this candle that went to the upside there.
Okay.
And then after that, you have a whole bunch of you have these rejection candles right here, which I'll just drag all the way across. Go back, see what happens. Okay, respecting that line so far. So with all that consolidation, you would have got out right there. I would have got out right there.
Right. 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 For sure.
All right, so that's that. Let's keep watching it real quick. So this area right here, if I'm thinking short game,
Yeah.
I would have got in right here, roughly.
Because that would be a break and retest, right?
Correct.
Yeah. And then, oh no. So let's be realistic. Let's pause that really quick.
Mm-hmm.
So most likely I would have got stopped out because I would have saw that opportunity as a beautiful break and retest, started rejecting, right?
Mm-hmm.
Then then we see an impulse up to where the highest high pretty much.
Yep.
So let's do that scenario right here and let's see how far it went up for that stop out. And let's try to figure out if it's actually going to continue to go down or maybe it does some other stuff.
Yeah.
You know what I'm saying?
So keep playing it out.
Yeah, yeah. Let's play it out. Yeah, let's see where
Okay.
it goes. So it's slowly, it created higher highs 3 times. Now it's kind of ranging. I would have hated this trade.
So I'm looking at this right here. I'm observing that right there. just peeping it. Potential short, maybe.
Right.
Boom. Money.
Yeah. So it actually did its thing.
And then it came back to this box here.
Right.
Let's see. Can you go to the 1 hour on your screen on GA?
I don't have that screen up right now.
I still see your screen.
Okay, 1 second. Okay. Yeah, it's right here. So here's GA on the 4 hour.
Hmm. So far it's respecting that whole idea of making an entry within a zone that has wicks and rejection candles.
Right. Yeah. So now we just gotta wait for it to play out.
Yep. Okay. So let's keep rolling this film here. Now it looks like it's in a, so far just like a, this type of deal, right?
Right. Cool. Lower highs.
Yeah. Push through, rejected. Honestly, I don't like it for shorts anymore.
Right. Been there before.
I might like it for shorts if it starts giving me some wick action. I'm gonna go to 15 minutes, see what it's doing. Yeah, I'm not liking it. Gradually descending though.
What did it do? Now it's back in the channel, going down.
There we go.
So would have like you would have entered this trade or no? What do you think you would have done?
I might have entered after seeing some rejection here.
Gotcha.
Sheesh, there's the next candle.
Damn. That is ugly.
And then what we got? Money. Now it's back to that ray, which is where price action took place
Right.
in history. So this is what I'm talking about, like, just the, the probability aspect, like this area right here could potentially be like a long position, um,
Right.
because you have
There's so much. Yeah.
the two wicks right there. You got the price action candle right here that left it. And then you have a push down following by two candles that rejected that push down. And then you have this candle here, which got rejected by this engulfing candle. So maybe, but it's just been. So now we're above here. I'm gonna get rid of all this extra crap.
Hmm.
Now we're above here. Money. Do you see why I put this box?
So there is a rejection candle all the way to the left. Okay, yeah. And then over to the right there as well.
Mm-hmm.
And then towards the bottom of the zone, um, I see that one, and then all the way to the left. Keep going, keep going, keep going. So not that one, but the one to that one. So that gave me a strong indication that this is a decent zone.
Mm-hmm.
Mhm.
Nice. Perfect. Yep. That's pretty much why I put it. Mainly these two things right here.
Right, right. So I think what I've been doing then is I've been pretty much looking at the bottom, like the support area mostly versus, you know what I'm saying, versus like both a just like a zone, right? Like a zone, there's a top and a bottom, like there's the area.
Yep.
And I've just been looking for the bottom. So just pretty much support and not really identifying the rejection areas on the top.
Yes. That makes sense.
Yeah. And I kind of like what I like what we're doing because it's essentially like, how can I explain it? It's like when we kind of talk through it and do play-by-plays, I'm like learning as we kind of discover, like, 'cause, I asked you like, hey, like, let's go through this, right? And so like in my mind, I know what's going on, like I understand it, but then like when we start talking about it, it's like I actualize what I'm actually doing wrong. You know what I'm saying?
I
And
see.
I think it's great for your students to do this on a regular basis because you and we've been trading for what, 3+ years now, and I'm I have to go through the basics again and understand that, like, I might not pay attention to the details sometimes. So I think it's great,
Yeah.
uh, and
That's good.
powerful. Yeah, for sure.
Awesome. All right. Uh, all right, guys. Well, that's pretty much the what we're going over today. So I'm gonna go ahead and stop the recording. Feel free to like, share, subscribe to Global Cap FX, and I appreciate all of you, and hopefully you guys took away some value from this video from Nate and I. Talk to you guys soon. Later.
Later.